Hello future CAs, welcome back to my channel again. Your one-stop guide for everything related to CA exams. If you are new here, I am Pooja, a chartered accountant. I have an experience of working for Ernst & Young and KPMG, and I help CA aspirants like you succeed with practical tips, strategies and support. So in today's video, we are continuing the series where we will learn how to present the answers correctly in CA Final IDT. So this is the third episode. Basically, we will be seeing how to present the adjustments which are usually given in the first compulsory question, which will be relating to computation of admissible ITC or computation of the GST liability. So in each episode, we are going through one adjustment and we will see what is the error made by the students while presenting that adjustment in the exam, and we'll also see what is the correct adjustment. So guys, if you want to enhance your marks in IDT, this series is for you. Please get a notebook and you can note down the important points. So I have created a separate playlist for this series named the CA Final IDT Presentation Series. The link has been added in the description below. You can watch the videos from the link. If you are new to my channel, please subscribe. Every subscription works like a motivation for me and it also makes my day. So guys, when you visit my channel, do check out the playlist section. You will find several curated playlists for the CA final exams. Make sure to explore them and watch the videos in order to get maximum benefit from each topic. So first let's see what adjustment we have for today. So J Limited, a registered recipient from Gujarat, availed supply of manpower security services from Mr. Y, who is also from Gujarat and a registered person. The amount paid is rupees 1 lakh in February and tax rate is 18%. Compute the admissible ITC and compute the GST liability. So first we'll have to understand the transaction. So in this case, J Limited is a registered recipient from Gujarat and it availed manpower security services from Mr. Y, who is also from Gujarat and who is also a registered person. So both are registered person here. And the amount paid is rupees 1 lakh in February and the GST rate is 18%. So now the moment you see manpower security services, something should immediately strike you. This service is often connected with reverse charge mechanism under GST. But we have to also remember that RCM will not apply in every case. We must identify who the provider and who the recipient are. And we have to also check the status of the provider. That is whether the provider is a body corporate or a non-body corporate. So let's decode these facts carefully and go through the wrong and the correct treatment. So first we'll go through the wrong treatment. So usually this is the wrong way how the students present this transaction. So usually they assume in this case, since both the supplier and recipient are registered, it's a forward charge case. They show GST liability under reverse charge and then they set it off against ITC. So let's see how they usually show it. GST liability under forward charge, then GST liability under reverse charge on manpower security services, less ITC available, hence net GST payable in cash. However, this method of presentation is wrong because this GST liability on reverse charge, this cannot be set off against the ITC available. So this is wrong here. This ITC available can be set off only against GST liability under forward charge. So first we have to show GST liability under forward charge. then less ITC available, and this GST liability under reverse charge should come after this. So mainly this is the presentation method followed by the students. So this is the mistake. They have wrongly set off the ITC against the reverse charge liability. This is not allowed because the tax payable under RCM is not an output tax, it is input tax. Hence, it cannot be adjusted through ITC, it must be paid in cash. So, this type of presentation is wrong. So, now let's move ahead and see what is the right treatment that has to be followed. So, first let's see the right treatment of computation of net GST payable in cash. So, first we have to show the GST liability under forward charge, and then the ITC, including manpower security services. So after deducting this ITC, we'll get the forward charge liability on outward supply payable in cash after set off of ITC. And then we'll have to add the tax on manpower security services payable in cash, because the tax payable under reverse charge is not an output tax. Hence, it cannot be set off against ITC. Hence, we'll have to pay this in cash. So, this is the right method of presenting this answer. So, we have to always keep this point in mind that ITC can be set off only against output tax, and the GST of the reverse charge is input tax. So, this has to be paid in cash only, and you cannot set it off against ITC. So, this is the important point to be remembered here. So, in this case, since Mr. Y is a non-body corporate and J Limited is a registered recipient, this transaction falls under the reverse charge mechanism. So, J Limited must pay GST on manpower security services in cash. However, once paid, J Limited can claim ITC on, because ITC is allowed on the RCM payment. So I hope you all have understood this right treatment of the net GST payable in cash. Now let's have a look at the right treatment for computation of the admissible ITC. So this is the right method to present admissible ITC. Manpower security services ITC is allowed since security services are provided by non-body corporate to a registered person. So the tax on the same is payable under reverse charge. So we have CGST at 9%, 9,000, and SGST at 9%, 9,000. So this is the right way to show the admissible ITC. So ITC is allowed since security services are provided by non-body corporate to a registered person, and the tax on the same is payable under reverse charge. There are some key takeaways for these type of question. Point number 1, reverse charge tax cannot be adjusted with ITC. It must be paid in cash first. Point number 2, once paid, the same amount can be claimed as an ITC under the next step. Point number 3, RCM applies to manpower or security services only when the service provider is a non-body corporate, like an individual or partnership firm, and the recipient should be a registered person. Point number 4, don't confuse forward charge, that is output tax, with reverse charge liability. ITC can only be used for paying output tax. So guys, this was a very commonly tested and conceptually rich topic, manpower security services under GST. Remember, clarity about who is providing to whom and in what capacity is the key to identify whether RCM applies or not. If you understood this topic, you have nailed one of the most frequently tested adjustment in GST computation. So that's it guys for today's episode. I hope this video helped you understand how to present your IDT answers more effectively. In the upcoming videos, we'll continue with more adjustment and common presentation errors. So don't forget to like and share the video and also subscribe to my channel so you don't miss out the next part of this series. All the best with your preparation and I will see you all in the next video.